Hello and welcome to my YouTube channel. My name is Senzo. I'm a forex mentor. Today I'm going to teach you about a high probability trade and a low probability trades. Okay, without wasting your time. Okay, let's picture this as an uptrend market or uptrending market. Okay, high, hello. Okay, now all of a sudden the market has break this high low. We have been taught that when the market breaking the higher low, that means that the market is changing the trend. Then we'll have to look for the order block which created that break of that low, and then we're gonna sell the markets there. Okay, that's how we're trading it, right? That's how we're trading it. That is a low probability trade. The trade like this is a low probability trade. The reason why I'm saying this is a low probability trade is that because the market is not confirmed that it has changed the direction to be bearish yet. It has not confirmed yet. By breaking this structure, it does not mean that this market now has changed to bearish. This means that something wants to happen, but it does not confirm that this market has changed to bearish. So now we have to be alert that this market might change to bearish, but we're not sure yet. We're not gonna confirm the change in trend by breaking off this higher low. Even if this low also was broken or this low also was broken, we're not sure yet if the market has changed the trend. This might be the grab in liquidity, because remember what I told you. I told you that below the support there always a liquidity there. The market will like to grab the liquidity first. So below the support there's liquidity. So if the market is breaking the structure, you must not say it has changed the direction, because that might be a liquidity grab. Okay, so now this is a low probability trade because we're not sure, as this structure has been broken, that the market has changed the direction to be bearish. So that's why I'm saying this is a low probability trade. To sell this market on this order block is a low probability trade. The reason is that when the market break this higher low, we cannot confirm with that the market has changed the direction to be bearish, or it will change the direction to bearish, because this might be a liquidity grab. The only thing we should do is that we must be alert. We should not put the sell limit here, because that is very, very dangerous. But do work for some people sometimes, do work, but this is a low probability trade. Now, what is a high probability trade? Okay, just picture this drawing as a bullish market. Okay, this is a high, low, high, low, high, and then what the market did, broke this low. Remember what I told you on the first drawing is that as this low is broken, we not confirm that this market is changing the direction to bearish. We not confirm, because this break of these lows can be the liquidity grab. Remember what I told you. The break of this low can be a liquidity grab, so the market might carry on push to the upside. So now we'll wait for the market to push to the order block that created the break of the structure, which is the low probability trade. We're gonna leave the low probability trade and wait for the market to break this low that it has created first. To break this low that it has created, which is this low, is the low that the market has recently created. Okay, let me start afresh, because I know some of us, they cannot catch this thing so fast. Okay, let's picture this as a market that is trending to the upside. Okay, high, low, higher low, higher high, and then all of a sudden the market has created a lower low, and this break this high low, break this high low and created a lower low. Okay, as the market break this this high low, it does not mean that this market has changed the trend to be bearish. This break of this low, the break of these lows can be a liquidity grab. Remember what I told you. I told you below the support there's a liquidity, above the resistance there's a liquidity. So the break of this low can be a grab of liquidity. This market can continue push to the upside. So that's why I'm telling you that this first entry can be a low probability trade, because this market can carry on push to the upside. So the high probability trade is that you have to wait for the market to break this level it has created, this which is a lower low. This level it has created is a lower low because it's lower than this low, so it's a lower low. You have to wait for the market to push down and break this lower low. After the market has break this lower low, okay, now you can see that this market has switched to bearish. Okay, now what I'm gonna do now, because they break this low, I'm gonna wait for the market to come back to the order block that created the break of this low, and then I'm gonna sell it from there. Now someone gonna say that okay, now on a higher time frame, now like on a 4-hour time frame, for me to wait for this, gonna wait for so long for this pattern to happen, or to get a high probability trade. Okay, now what you're gonna do now, okay, let's say now you got your order block like this. Let's say this order block was on a daily time frame. Let's say it's on a daily time frame. Okay, what you gonna do now to get a high probability trade on this low probability area, on this low probability trade? You can get a high probability trade on this one. How you gonna do it now? Let's say this one was a daily time frame. You go to order block here on a daily time frame. Okay, your market is right here now. What you gonna do now? You're not gonna just sell the markets, no. You're gonna wait. You're gonna wait for the reaction of the market. You're gonna look for this pattern on the lower time frame. On the it can be 15 minutes or 30-minute time frame. You're gonna look for this pattern number 2 on the lower time frame. Now what you're gonna do now, what I'm trying to say now, I'm trying to say that okay, you're gonna wait for the market, break the structure, and come back to this. Okay, remember I've called this a low probability trade. Okay, the market is here. Now you know that okay, this is a low probability trade. Okay, what I need to do now, because the market is here in this area, I'm gonna switch to the 15-minute time frame or 30-minute time frame and look for this pattern, or for this trade number 2 on the lower time frame. So on the lower time frame now, on the lower time frame, like 15 minutes will be bullish like this when it comes to this area. And then what you're gonna look for, you're gonna look for the market to give you this pattern, or to give you this entry number 2, which is a high probability trade. Okay, I'm gonna show you on my next video on what I mean, but I think you will understand easily now if I'm saying that you're gonna switch on your lower time frame and look for this pattern so that you can trade on this lower probability area or low probability trade. What I'm trying to say is that if the market break the structure and move back to this area like this, remember I said this area is a low probability area. So now on the daily time frame, you can't wait for this pattern now. It's going to take you forever to wait for this pattern. Now what you're going to do, when the market reach this area, you're going to wait for this pattern on the 30-minute time frame or on the 15-minute time frame, like on the lower time frame. That's how I should say it. On the lower time frame, you're going to wait for this pattern. Then remember that the first the lower time frame are the ones that first first switch to whether bearish or bullish when the market is changing the trend. So now you're gonna wait for the market to come to your point of interest, and then once the market comes to your point of interest, you're gonna look for this pattern. Remember how this pattern has been formed. The high low has been broken, and then you wait for the market to return to the order block and break and come down, break this higher low, this lower low, and then you take a trade on this order block. So you wait for this pattern on the lower time frame, like on the 15-minute or on the 30-minute time frame. I hope you understand what I'm saying. I'm not sure if I'm explaining it right, because the English is not my home language. So for clarities, I think you'll have to comment on the comment section, then I can make it clear for you. Okay, let's recap now. This is a bullish market, and then all of a sudden the market just break the higher low, which is this one, and then we're not sure yet if the market has changed the direction, because this might be a liquidity grab, because below the support there's a liquidity, so this might be a liquidity grab. So if the market pushes to this level, what we're gonna do now, because this one is a low probability, because we don't know that if this break of structure was a change in trend or what. So this, if you enter here, this is a low probability trade. So you can make this low probability a high probability by waiting for this pattern on the lower time frame. Wait for this pattern that I've taught you on the lower time frame. Remember how this pattern has been formed. This picture, this also is a higher time frame, and then the break of this higher low, and then you wait for the market to return to the order block that created the break of this higher low, and then also wait for the market to create another lower low, and then the return to this order block. Then that's where you will take your trade. That's where you take your sell trade. I hope this video will help you. If you haven't got some clarity on this video, please comment on the comment section, then I'll try to explain furthermore. Thank you so much for watching. Have a lovely day. Bye.